All right, hey everybody. Today is Monday, April 20th, 2026. It's Luther on another YouTube video. I appreciate you tuning in. For those that don't know, we're here in the Kansas City market doing real estate investments, sales, lending, and service providing for real estate investors. Okay, so let's get into it. I'm continuing on the topic of compensation for investment operators. I went through a series talking about real estate investment operations. In my last video, I got into how the investors or the operators who are on the ground running or operating the real estate investing business can get compensated. How does that look? Okay, it really is intriguing to me. Some of the people close to me, mentors and so forth, seeing how investors move through the process as things change in the economy, geopolitically, economically, and so forth. And so we're at that time where things are, a little more volatile. There's a lot more uncertainty. We're starting to see more distress, not just from rentals, people renting or doing seller financing. I don't want to get too far off track, but in today's video, right, I'm going to talk about how operators can get compensated more efficiently as they're going through the process. Okay, times are uncertain, right? There's more distress, things are kind of weird, but there still are opportunities. Real estate is still an amazing play. So let me recap on a bit of what I talked about on the last video before I move forward. Okay, a key thing that I want to emphasize is where the exchange parts are, right? Where are the exchange points where service is being provided or money is being exchanged for real estate investors? Okay, let's go through the list, right? And these are the main ones. There may be more, but I want to just go over the main exchange points, right? Very first one, if you're an investor, if you're an operator, a big thing is other people's money, right? So one of the key exchange points is when you get capital from an investor, from a private money lender, or from a backer. It could be a business partner type of thing. That's a key exchange point that I think a lot of investors sleep on, okay? The other key exchange point is when you actually purchase an investment property, okay? Then from there, the third key exchange point for a lot of investors out there, right? A lot of investors are obsessed with flipping properties, fix and flip. They want to do rehabs. That's the third exchange point, the renovation, okay? Then the fourth exchange point, depending on your strategy, of course, right? The fourth exchange point is you as an investor either reselling that property or you renting it out, okay? Those are the four main exchange points, right? And I bring those up because that may help you to determine how you can get compensated or how you can pay yourself as an operator, okay? So again, it really depends on you, the capital that you're using, the strategy that you're deploying, and how you operate your business, okay? So just to be clear, a lot of my audience is real estate investors who are on the ground, right? Okay, and it's coming from my perspective too, because most of my career I've been doing sales. My background's in property management. I've worked with several contractors doing renovations, okay? All of that was for my clients mostly. And I've wanted to invest throughout the years and have invested throughout the years. And what I noticed was when I started to look at the capital piece about 6-7 years ago, I needed to figure out how I can move through this process more efficiently, which brings us to today. So hopefully some of y'all can get through the process more efficiently without, getting stuck in some of the pitfalls that me and a lot of my colleagues end up facing, right? So again, and there's more exchange points, by the way. I refer to those four because they're the four main ones, but there's others out there. In fact, let me talk about, or at least quickly mention some of the other key exchange points, right? One could be even before, right? You get money from your money partner. Sometimes they're getting money from someone else. Okay, so I don't want to get too far in the weeds, but that's another exchange point. A number of the individuals who I partnered with or got money from for our investments or for my own investments, right? They got their money from someone else. And sometimes I didn't even know about it, right? So you got to think about that, right? Sometimes your money person is getting their money from another money person, okay? So that's a key exchange point. Then another one that I may have alluded to on the last video, when you refinance the property, that's a huge thing, especially for commercial and multifamily, because raising capital, the private equity is huge in the multifamily and commercial space. And some of those projects may take 2 to 3 years, and they are heavily relying on the refinance, right, to be able to get all of their limited partners, okay, recuperated, right? Okay, so, and then onto the back end. I mentioned the back end on the last video too, right? What is the back end? Are you gonna wait all the way to the very end to get compensation? Does that make sense for your strategy and for you and what you're looking to do? Again, the back end, just real quick, is if you're gonna go through an entire renovation and resale, right, or a fix and flip, the back end may be when you sell that property, right? That could be 6 months, it could be 12 or 24 months. It may not even happen. Okay, that's one thing. The back end for the rental, for a lot of operators, right? They're going through this whole thing where they source the capital, they acquire the property, they renovate it, they refinance, then they rent the property. That, again, could take months, if not years. So are you gonna wait that entire time to get yourself compensated? And again, this is for the operators, those who are on the ground running the operation, running the business or businesses. And I mentioned limited partners. That's usually the money people. If you're on the ground, like in my position as an operator, we're considered the GP or the general partners, okay? So anyway, let's, again, the four main exchange points, right? When you get money from your capital investor, okay? When you acquire the property, okay? When you get through the renovation, okay? And then when you either resell or when you get the property occupied and cash flowing, however you do it. And there's a number of ways to do that. That's on some other videos, okay? I don't want to get too carried away here. But depending on your strategy, how are you going to get yourself compensated, okay? I would venture to say that a lot of investment operators need to look at either getting compensated on the front end, up front, as soon as you get capital from your capital investor or perhaps your private money lender, you may want to get yourself compensated, and it may be almost like a retainer, right, in a way, because as some of y'all know, those funds are going to get used up somehow, some way, to either cover your own expenses, your personal expenses, or to cover the expenses that the business incurs, okay? So you got to think about that. That's one way, right? The other way, which I have done multiple times, and it seems to go over pretty well with my backers and with my capital investors, is when we acquire the investment property. That has gone over the best for me and my backers, because, you know, someone may not feel as comfortable depending on, you know, how they view investing and how deep their pockets are and how many transactions you're looking to do and so forth. More often than not, I think a lot of backers are going to be cool with you getting yourself a little something when you acquire the property. Okay, how much? You got to determine for yourself, right? What you and your backer can agree on. Because as you are going through the process, as I mentioned multiple times, it's going to take time. It's going to take energy. It's going to take work for you as the operator, as the general partner on the ground to oversee not just the acquisition, right? To help put this in perspective, right? You are overseeing the acquisition. You're overseeing the renovation, right? Then you are overseeing getting that property either resold or rented. Not to even mention the refinance, right? If depending on your strategy, you may need to oversee that process too. Even if you're outsourcing certain tasks, right? For me, I have opted not to get hands-on with the renovation. So I usually outsource part of the renovation to a general contractor or maybe a team of contractors, depending on the scope of work and what needs to be completed. Even though I'm not in there physically doing the labor myself, I still need to manage and lead and oversee the project. And that requires me being on site at least once a week to confirm that progress is being made. I may get some pictures, right? I may have to update the scope of work. I gotta make sure that the utilities are still on and nothing has been removed or nothing was stolen. That the whole bit. That's just on, the renovation, right? As an example, that's one way that I do it. Then, depending on how we move forward, right? We gotta determine, okay, we're gonna resell this property or we're gonna rent it out, right? When it's time to resell, I, as a licensed real estate broker, can get a little bit more involved, or I could bring in an agent to assist with that. That's if we resell. If we rent the property, or if we do seller financing, I myself can get a little bit more involved as well through that process. Even though I outsource certain tasks to other service providers and other agents, I still, again, am managing the investing business, okay? That's the whole thing, right? I want y'all to think about the capital, the strategy, and the operations, tying it all in together, managing this business, or, in a lot of cases, there's multiple business that you are in charge of. And you own these properties, you own this business, right? It's up to you as the general partner, boots on the ground, person overseeing things to work through that process. And again, it all has to tie in together. And I want to encourage y'all to figure out how you could get yourself compensated through that process, right? Because it can be daunting sometimes. Getting through one renovation project can be very challenging. Then as you're growing your operation and your businesses, you may end up doing 5 to 10 or more at one time. You need to get your backers on board with getting you squared away to oversee this process. And another thing, if they're not on board with that, don't work with them, period. It got to the point for me where if it's an investor as either a partner or a client, if they don't see value in that or my worth, or if they don't understand the process, once I break it down, if they still don't understand it and see why it's important for me to get paid up front and why it's important for me to, be compensated a certain way to get through the process, then I'm not going to work with them. So that's something y'all have to figure out. Again, whatever your strategy is, if it's residential, single family, multifamily, commercial, long-term, short-term, medium-term rental, you want to do fix and flip, right? You want to do seller financing, right? Whatever your thing is, you got to figure the thing out. So that's it for today. I appreciate you tuning in. Stay tuned. I'm going to continue the series. okay, and talk a little bit more on a future video about different models that I've done and follow. And then also I'm going to get a little bit more into what I mentioned on the last video briefly, the general partner, limited partner structure that a lot of commercial multifamily investors use, because again, I think incorporating some of the good things from the commercial and multifamily space and incorporating that into your single family investment operation can be super beneficial. So again, thanks for tuning in. Have a great day. Peace, y'all.